Good day, ladies and gentlemen. Thank you for joining us here at Banknote Trading, where I have arisen from the dead. Haven't posted in a while. No longer trading Forex. I am trading in the futures markets. I found more success in that. I have been trading for about 5 years. Just recently switched to futures market and have passed evals in order to be $250,000 funded. I'm changing this channel. As you can see, the previous videos were about market structure and price action, which I do think are the foundations, the fundamentals of trading, which everybody who's beginning to trade should learn price action and market structure first, and then add indicators, because indicators can only do one thing, and that is indicate. So with this channel now, I am showing how to pass evals more easily and quicker without getting things too complicated. Trying to stay on one time frame, 1 to 2 time frames, either hour or 30-minute. Because, like I said, most of the people out there making videos complicating strategies, or we'll make a video about the math behind buying a lot of evals. I'm just gonna keep it to the basics. All of the FVGs, going to different time frames, 15-minute FVG, go look at a sweep, order block, rejection block. If all strategies work, which is what has been said with a lot of traders, if all strategies work, it's just about risk management, then we're going to see with some strategies that I find to be easy instead of learning all those complicated strategies. And with this strategy in particular, I have a few I think I found an edge in. I had a paradigm shift in learning the difference between an edge and a strategy. Basically, the edge is when you find a pattern in price action and then you layer on your strategy in order to exploit that price action in order to get to positive expectancy where you win more than you lose. So with this particular strategy, it is simple. I have it written on the screen as we record this. It is an NQ strategy on 30-minute. Like I said, this can also work on the hourly, but just basically just trading the engulfing candle in the direction of the VWAP. So if it's over, meaning that if it's over VWAP, then you'll trade that engulfing candle, which means the body of the candle is lower than the previous candle's low and higher than the previous candle's open, or the open and close of the body. So like I said, if it's over VWAP, trade the bullish engulfing candle. If it's under VWAP, you trade the bearish engulfing candle. And from what I have looked back at over the past few months, it seems that I got the positive expectancy by making the TP 50 points. And I'm trading on mini, which means it should make $1,000 each trade. So you do have 2 trades. If you start a new eval before it fails on a 50K account. Now, if it doesn't work this week or it doesn't work this time, it doesn't mean that I didn't reach positive expectancy. It just means that maybe it should be a $500 TP or a $500 stop loss. Or it could mean you may need multiple evals in order to pass due to the variation of whether you may have 2 losses in a row. But this type of strategy doesn't take too long. It should happen within a week because alpha candles show up all the time on these 2 time frames. And as you can see, this is the open candle. I'm in Eastern New York time. Eastern Standard Time, and like the opening candles are kind of tricky, but you can see here they kind of teased me, and it finally did go to take profit. And I had to do more than 1,000 to cover like the commissions and the fees. And I'll be showing that this does happen often throughout the week. In the beginning of the video, in the beginning of this video, move this cursor up to where it happened also in Asia. I trade the Asian and New York session, and then after this, I'll show you that I didn't fund it, and we'll keep track of calendar and which trades make it. So thank you for joining us.